There's one number that your broker shows you that can destroy your account. It's called buying power. I'm going to share a little story with you about some of my own trading. I wasn't wrong about the stock. I wasn't wrong about the strategy. I was wrong about one thing, and it forced me out of a trade that I should have survived. And that mistake changed how I trade forever. If you sell puts or use margin, this video is important for you. Now I want to explain to you what buying power is, because most of you rely on it and you shouldn't be. Buying power tells you how much you can buy today. It's a static number. It doesn't change as the market fluctuates. It doesn't tell me at what point I would have to liquidate a position because I don't have sustainability. It doesn't tell me at what point would the stock have to drop where I would have trouble holding that position, or worse, that I wouldn't be able to hold it anymore. It doesn't take all of your positions into account. Like, what if one position drops by 10%, another position drops by 15%? Buying power doesn't see any of that. It doesn't show you where your real margin risk is. And this is a problem that all brokers have. They don't show you the real number. The end result is this: buying power is a meaningless figure, but yet most traders rely on it to make their trades. That is a huge mistake. Now I want to tell you why. The absolute biggest risk in trading is being forced to liquidate a position at the worst possible time. I'm going to use an analogy to help you understand. A while back, I had a property for a long time in the Virgin Islands. And over the years, I thought about selling it. It was a great income producer for me because it was a rental property. But at the same time, it was a ton of work. Contractors, guests, bookings, being halfway across the world, managing it. And you see, although I listed it for a while, a long time ago, I was never in a financial position in which I had to sell it. So the result was that I listed it a few times, it got shown a few times, I didn't sell it. And then when I actually did sell it a couple of years ago, it was at a point in my life that I really thought through keeping it versus selling it. I had a number in my head, I listed it, it was great timing, and someone was there to buy it almost instantaneously. In fact, I sold it for more money than what I ever listed it for previously. And here's the difference. At that time, I didn't actually have to sell the property. I wanted to, but I didn't have to. That is the distinction. Now, fast forward to last year, and I was developing some other real estate projects in Bali, Indonesia, all the way around the world. Now, I was still in the building phase, so I wasn't making any income. In fact, I was spending money on the project like water, and it was just draining my account. Also, over time, the climate in Indonesia changed. The legal structure changed. Foreigners in Indonesia changed. I was living there for a while, then I wasn't living there, and it was hard to manage the project. And what ended up happening was I really felt forced to sell the project. I really wanted to get my money out of it because as time kept going on, my money in that project was diminishing. So it put me in a predicament, like a forced liquidation. And what ended up happening is I sold it for way less than the amount of money that I had in that project. And here's the difference. When you feel you have to sell something, you end up selling at the worst possible time. Now, the stock market and options trading is the very same thing. So let's relate it to my personal story with MicroStrategy as a real life example. Now, 2024, I was over the moon. I was trading MicroStrategy over and over and over again. In fact, I made over $250,000 just on that one ticker alone in realized gains in 1 year. So what did I think? I thought I was a rock star. And as time went on, I unintentionally took on more and more risk because it felt really safe to me and consistent. I was busy doing a lot of other things. I was using margin, and I wasn't always keeping track of hypothetical drops in that particular ticker, what that could or might do to my account. And those of you who follow MicroStrategy have seen the chart. In fact, I'm going to show it to you right here. It looks ugly. Down and down and down. I ended up having shares at 400, averaging down, buying more, overextending myself. And today, MicroStrategy is trading just a little bit over $100. Significant drop. Because I was using margin, my account wasn't able to withstand that kind of pressure. And I ended up being forced to liquidate the position. So when you liquidate a position, it means this. You're turning a paper loss, which doesn't really mean a lot, into a real recognized loss, which hits your pocketbook. And as I reflect about my experience and learn more from that experience to make sure that never happens to me again, I recognize this. When trades are working, your confidence goes through the roof. Position sizing naturally creeps up sometimes. Again, because you might feel like a rock star, like I did. I mean, there were literally weeks that I was making upwards of $30,000, and that gave me false confidence. But what was happening behind the scenes was this. MicroStrategy is not necessarily just a proxy for Bitcoin. So most people think, and I was guilty of this as well, there's a correlation between MicroStrategy and Bitcoin. Bitcoin goes up, MicroStrategy goes up, Bitcoin goes down, MicroStrategy goes down. I'm a big believer in Bitcoin and cryptocurrency in general over the long term, but I was kind of blinded to the fact that MicroStrategy was consistently issuing new shares so they can use leverage to buy more Bitcoin. And leverage is kind of like a two-edged sword, just like leverage in margin. It can significantly amplify your gains, but if you keep it unchecked, it can destroy an account. And the old adage that people talk about is super true. Past performance does not guarantee future results. So again, what ended up happening with me is I liquidated a position and took a realized loss, erasing tons of time in realized gain. Now it's super easy to make money in the market and not as easy to keep it. And that is why focusing on consistent, even if they're small, realized gains over and over and over again is so much more important than swinging for the fences. I give you this content in these free videos because I want you to learn not just from my knowledge, but also from my mistakes, because many of them have been completely preventable. Also, what happened in my situation with MicroStrategy is that margin can change like this. You see, the deck is kind of stacked against small traders to begin with. You'll know what the margin requirement is when you enter a trade, but those requirements can change when the broker wants to change them. And typically they'll change when increased volatility happens. And oftentimes you don't have an opportunity to overcome that. So as the ticker was dropping, my account value was dropping, my margin was going up, and again, I couldn't maintain those positions, resulting in a realized loss. That's why I find it so important to minimize or eliminate realized losses, because they can erase tons of time of realized gains, and it's harder to recover from that. So the point is, you have to recognize this and prepare for it. Hope is not a strategy. It's important to model worst case scenarios. Look at your entire portfolio. Input hypothetical drops in your underlying positions and see if your account can not only sustain that level, but also do you have extra cash on the side to buy more if it drops? You have to ask yourself ahead of time, what are those levels in which I'm going to buy more shares? Because lows can always go lower. And most of us don't have a bottomless pocketbook. And here's the moral of the story. Before you enter any trade, number one, look at the ticker. Is this a ticker that I'm comfortable with holding long term? If the ticker drops by X%, what will I do? You want to ask yourself ahead of time, at what levels will I want to buy more shares? How many shares of this ticker can my account comfortably support? I want to assume the expansion of volatility. I want to cap exposure intentionally. And I want to design trades to survive stress, not optimize yield. Now that trade didn't cost me everything, but it very easily could have. And I decided I would never let margin control me or my account again. Now, some of you like a list to use when you're trading because it's easy to view and then execute. So if I were to make a list, it would be this. Number one, make sure your tickers fit with a long-term objective, just in case that ticker continues to go down for a significant period of time. Number two, make sure you know ahead of time what percent of your account do you want in any one ticker? And you need to position that first trade to keep cash on the side to buy more if and when it drops. Number three, you need to know your correlation risk or have some sort of sense about it. You see, a lot of people trade a bunch of things in their account, but oftentimes, probably more often than not, they're all correlated. So one goes up, they all go up. More importantly, one goes down, they all follow suit. So if you have a bunch of different things in your account, it's best to have non-correlated things. That gives you a little bit more protection in your account. It's not about making money today or this week or this month. It's about being sustained. Number 4, and this is critical, you have to model hypothetical drops in your underlying and what that would do to your account. Most importantly, if you're using margin, you cannot look at buying power as if it was in a silo, because that number is largely irrelevant. Now you can create a simple spreadsheet to do that, and I'm creating easy to use applications to make it easier to use on a regular basis. So stay tuned for that if that's of interest to you. And remember this one lesson. This is critical to being successful in options trading. Focus on realized gains and minimize or eliminate realized losses. Forced liquidations are your enemy. Don't put yourself in a position like that, like I did with MicroStrategy. Anyway, I hope this video helps. If this resonates with you, smash the like button, share it with a trader friend who might need to hear it as well. Be sure you're subscribed to the channel. I'm putting up videos every day, talking not just about different tickers and walking through trade ideas, but real life scenarios like this, sharing my own personal story. And hopefully that's helpful to you guys. Thanks for watching. Thank you for being a part of the community here, and happy trading.